Okay, morning all. This is the final video for farm accounts, and it's we're just going to prepare what's known as a drawings account. Now, it's just a ledger account which details all of the drawings that the family or the farmer took for their own use from the business. Now, I've already prepared it here, and I'll just go through where the figures came from. This is a 2006 question, but in the 2006 question, they don't actually ask you to prepare a drawings account. I'm just going to do it to show you where or how you would do it. In most questions these days, they do ask you to prepare a drawings account. Not all, but most, I would say. So you'll have to do it for those questions that you've already started anyway. So the first thing to say about drawings, just before I start doing the account, is the drawings account is a ledger account, so it has a debit side, a credit side, as normal, and drawings, we've already said, is where the farmer takes something from the business for their own use. So it could be stock, in this case milk or lamb, that's goods that are produced by the business that the owner takes for their own use, or it could be cash. There could be inside in your receipts and payments account, there could be something here that says drawings, which means that the owner took money belonging to the business for their own use. Or it could be where the business pays a bill for or on behalf of the family, which is just like getting cash from the business. And we'll see an example of that. One here, can we see in part 6, veterinary fees and medicines include a check for family health insurance. So that's not a business expense, that's the family's own health insurance paid for by the business, so that's drawings. And then we see over here the last few things we're going to have in this account are other expenses to be apportioned 80% to farm and 20% to household. So what we're saying is, for instance, if the farm pays the electricity bill for the farm, the business that is pays the electricity bill for the farm, well, if the family was living in the farmhouse and using some of that electricity, it's like they've taken money essentially from the business, or taken something of value, which is the electricity that the farm paid for. Okay, so that's one thing. So if drawings is where the owner is taking something of value from the business, well, then capital is where the owner is introducing something or giving money to the business, if you like. We see it like in a sole trader, the capital will be, for a start anyway, it'll be the money that the sole trader first puts in a business bank account. They take from their own private bank account and they lodge in a business bank account, and they use it then to buy fixed assets and stock and stuff to start up a business. In bigger businesses, we see there's share capital, so it's lots of different people buying shares in the business, essentially giving money to the business and taking a stake in the business, a little bit of ownership of the business. So capital is putting money in and drawings is taking money out, or goods or something of value out. So they're kind of like two sides of the same coin, I guess. So the reason I'm going through all of this is because I just want us to get used to the different sides for ledger accounts. So even though you're not usually asked to prepare a capital account in this question, I've just done it very briefly here, and we'll come back to it in a moment. But what I just want to show from this capital account here is, we've already discussed the capital, and I suppose drawings as well, I should say, don't really fit into our nice little 4 categories of expenses, liabilities, assets, gains, So, but what we have said, I think, in the past is that capital acts like a liability because it's the money that the business owes to the owner. Because if the owner put money in a bank account the first day in order to set up the business, well, really, if the business closed down in the morning, it should be repaying that money to the owner. So it's money owed by the business to the owner. So it acts like a liability. And therefore, anytime the owner is introducing new capital, when the capital account is going up, as it were, we should be putting stuff on the credit side. Okay, so rather than trying to fit drawings into a category, knowing that it's kind of the opposite to capital, anytime the drawings account is going up, we put information or figures on the debit side because it's kind of like the opposite of capital. Okay. And here, when we do finally come to this to do the drawings account, when we put all our information in here, this is all the stuff that the farmer took from the farm business during the year. What we do is then we balance it against capital, or in other words, we say, well, that's all the money taken out, so we reduce our capital by that total amount. That's 4880 is what all of this adds up to. So if you like, the double entry against this is with the capital account, and that balances. Now each of these has a double entry when it comes to, I suppose, milk account, lamb account. Well, it'll be sale of milk, sale of lambs. We don't need to really get into all of that now. And again, as I say, just in case it's not clear, we do not need to create a capital account. The only thing that they usually ask for is a drawings account, and it's pretty straightforward to make. I just thought I'd explain one or two bits of it first. Okay, so let's get into it. Usually it's the same, pretty much the same things that go into the drawings account anyway. But the important thing to remember is all of the entries go on the debit side, and then whatever the total is, we put it in as capital in the credit side. Okay, we're not bringing any balances forward. There's no balance carried down, nothing like that. Okay, so if we go to the question first of all, we see that the farm produce used by the family, or taken from the farm if you like, during the year was 700 of milk, 300 of lamb. That's drawings. We put that in 700, 300. Okay, down here we already said that veterinary fees and medicines include a check for family health insurance. So the farm paid for the family's health insurance, 650. That's drawings. We put it in here. Okay, the next thing we look at is light and heat, repairs, depreciation, machinery, and loan interest. So these are all of the other expenses that are detailed here in part 4. Other expenses to be apportioned 80% to farm, 20% to household. Now, rather than doing all of the work again, all you need to do really is go up to your trading account, your general profit and loss account, if you like, for the farm, and look at, these are those 4 expenses. And this is the 80% we can see that we worked out for each of those 4 expenses. Now, if you want, you can divide by 80 and multiply by 20 to get the 20% that goes in here, or you can do it a little bit quicker. Maybe if you recognize that 80% is 4 times 20%, all you have to do is take this 2320, for instance, for light and heat, divide it by 4, and that'll give you 20%, and put that figure in here. That's a quarter of this figure over here. And same goes for each of these. Each of these are a quarter of these figures here. Okay, so divide by 4 to get the 20%. But as I say, if you prefer to divide by 80 and multiply by 20, that's fine also, because it won't always work out as nice and evenly as that. Like, it could be 70%, 30%, in which case there's no handy divide by one number. You'll have to like divide by 70 multiply by 30, or divide by 7 multiply by 3, something like that. Okay, so that's it for the drawings account. Just one ledger account, no need for dates or anything like that. Just as simple as you see it there on the page in front of you.